Hi everyone, welcome to our today's video. Investing and trading are two very different methods of attempting to profit in the financial market. It totally depends on you whether do you want to earn 10,000 rupees daily or become millionaire later. In today's video, we will understand what is the difference between traders and investors. How do traders and investors earn money? And most importantly, if you are a trader or investor, what you should do. So let's get started with today's video. Trading involves more frequent transactions such as the buying and selling of stocks, commodities, currency pairs or other instruments. The goal is to generate returns that outperform buy and hold investing. Traders usually might seek a 10% return each month. Traders generate profit by these two methods, by buying at a lower price and selling at a higher price within a relatively short period. Or the reverse is also true. Trading profits can be made by selling at a higher price and buying to cover at a lower price, known as a short selling, to profit in falling markets. While buy and hold investors wait out less profitable positions, traders seek to make profits within a specified period and often use a protective stop loss order to automatically close out losing positions at a predetermined price level. Traders often employ technical analysis tools such as moving averages and stochastic oscillators to find high probability trading setups. A trader style refers to time frame or holding period in which stocks, commodities or other trading instruments are bought and sold. Traders generally fall into one of four categories. Number 1, positional trader. Positional traders usually hold stocks within the period of months to years. Second is swing trader. They usually hold stocks or other commodities within the time period of days to weeks. And third is day trader, famously known as intraday trader. These traders make the transaction throughout the day. And last one is scalp traders. Positions are held for few seconds to few minutes and no overnight positions are taken. Trading is mostly dependent on short-term news, trends, demand and supply chain, people's sentiments, geopolitical tensions like the current world is facing, Russia and Ukraine crisis, and other factors. If you want to be a successful trader, then you must learn candlestick patterns, learn about price action and moving averages, study technical analysis and indicators like RSI, MACD, Bollinger Bands. Understand your risk appetite and accordingly take positions by analyzing risk to reward ratio. Use stop loss wisely. Avoid FOMO. FOMO means fear of missing out. Most of the time we take trades without proper analysis because we don't want to miss those trades, which often causes us loss. Now let's understand what is investing. The goal of investing is to gradually build wealth over an extended period through the buying and holding of portfolio of stocks, basket of stocks, mutual funds, bonds and other investment instruments. Investors may be content with annual returns of 10% to 15%. Investments are often held for years or even decades, taking advantage of perks like interest, dividends and stock splits along the way. While markets inevitably fluctuate, investors will ride out the downtrend with the expectation that prices will rebound and any losses eventually will be recovered. Investors typically are more concerned with market fundamentals such as price to earning ratios and management forecasts, even if they are not tracking the performance of their holdings daily. Since the goal is to grow a retirement account for decades, the day-to-day fluctuations of different mutual funds are less important than consistent growth over an extended period. As legendary investor Warren Buffett says, the stock market is a device for transferring money from the impatient people to patient peoples. So we must stay invested for longer period of time. If you want to be a successful investor, then choose fundamentally strong blue chip company. Do fundamental analysis of stocks. Diversify your portfolio means investing in different asset classes. Decide your goal means for how much duration of time you want to stay invested. Believe in compounding. If you know the magic of compounding, it will surely make you rich. Read financial statements of company to know future growth and how the company generates profit through different asset classes. At last, I would recommend beginners to start investing. Of course, by doing your own research. Once you feel comfortable with investing, you can think of trading. That's it for today guys. We'll see you in the next one. Till then, take care. Jai Hind.